that chart tells me we're in for a multi-year massive move higher in the mining stocks and probably gold and silver.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com. And back with us today is Dave Kranzler from Investment Research Dynamics. Dave, thank you so much for joining us today.
Thanks for having me on again, Elijah. I always enjoy it.
All right. Now, you recently put out an article about how mining stocks right now are extremely undervalued. They're actually cheaper, at least for some of them, more cheaper than they've been in the last 78 years. Why do you believe so?
Well, I mean, it depends on how you want to measure the relative value of the mining stocks. So Incrementum puts out a annual report on gold, and then they subsequently later in the year release a book of the charts that are updated. And they had a chart in there that showed it was the Barron's Gold Mining Stock Index. And I forgot that Barron's had a gold mining stock index, but it goes back a long ways. It goes back, I guess, to at least 1950. I don't know if it goes before that. And if you look at that index as a ratio of the price of gold, right now, that index is the lowest. That ratio of the index to the price of gold is at the lowest that it's been since 1950. So that's 78 years. And so that's one way to look at it. You can also use, I guess you could use like the HUI, the HUI, the Amex Gold Bugs Index relative to the price of gold. I haven't run that one for a while, or you could use GDX, which I forget. I think GDX may have came into an existence in 2004 or something. So you could take that back to 2004 or however far back it goes. And then I'm sure those are at long-term relative lows as well. So, that's just one comprehensive measure, the Barron's Gold Mining Stock Index. And I mean, I don't even know if the XAU goes back that far. At one point in time, I probably knew, but I don't ever look at the XAU anyway. So, it's just a good way to look at relative value in the mining stocks versus how these stocks are valued relative to the price of gold over a very long period of time. And so that's what I think it's a great index. It also shows that index in relationship to the S&P 500 ratio, and that's also at a 50-year low or 78-year low. It's as low as it's been since 1950. So usually, especially like myself, I'm a contrarian investor, and when you get relativity amongst the sectors that are at extremes, you're usually going to get some kind of snapback. And in this case, it would suggest to me that we're probably going to get a pretty extreme snapback. So that chart tells me we're in for a multi-year massive move higher in the mining stocks and probably gold and silver. Oh, one more thing I'd just like to add, because I published the Mining Stock Journal, and I've been looking at mining stocks now since about mid-2001, so almost 18 years. And in terms of the relative value of these stocks, I mean, looking at a lot of these junior mining stocks, it reminds me of when I was looking at them in mid-2001. And back then, the HUI index, when I first started, I think it was trading at like 45. And it ran up very quickly, and the gains were spectacular. And we also, we had a similar type of sell-off in the market that we had in 2008 that we've had recently, that we've had in the last year. And back then, the Huey index was taken down to 150, and then by December, it was at 300. So that's how quickly these things can move. And what's stunning to me is that the Huey index actually this time around bottomed. I think it got down. Again, this is from memory. I haven't looked at the Huey chart in a few weeks. I think it was down into like the mid 130s just recently. So it went lower this time around than it did in October of 2008. And back then, the price of gold was at 700. So I don't know. You tell me, does it sound like the mining stocks are cheap?
Right. And specifically, are you looking at the junior mining stocks or some of the larger companies?
I'm looking at all of them. I focus on the juniors, and however, I just wrote up an intermediate producing mining stock for this Thursday's Mining Stock Journal, and this stock, not only does it have over $4 of cash on its balance sheet, but it's producing assets. If you were to just apply, recent acquisition values have been, at least, for juniors that have deposits, around 80 to $100 an ounce. And this company has very, very high quality producing assets. And if I take their gold resource and also if I add on its silver resource, which is sort of a byproduct of their gold production, this stock's trading at a substantial discount. If you were to say, okay, what if they got taken over at $100 an ounce? And that's a bare bones bottom line valuation for what I would call the intrinsic value of the assets. And it has a couple other assets that I'm not even taking into consideration that have massive optionality upside value. So that's an example of an intermediate producer that throws off a bunch of cash flow that is extraordinarily undervalued right now.
Definitely. And as for, if we just look at the precious metal markets in general, just the metals, we've seen recently over the past couple weeks them rise significantly. Do you see this continuing?
It depends on what your time frame is. If you said, will gold and silver, if you ask me, will gold and silver be higher over the next 12 months or 12 months from now than it is now? I'd say, yeah, I'd say in all likelihood it will be. And part of what the driver there will be, I'm looking for a very, very large sell-off in the stock market. And we saw what happens today with the price of gold when you get a big sell-off in the stock market. At one point, the Dow was down, I think it was down almost 500 points, and gold was up $20 from yesterday. So what's interesting to me, and of course they're not talking about it on financial TV, is that, during this last week or two where the Dows had big sell-offs, gold has surged and silver surged on those days. Now, when the Dow's flying and gold and silver are getting hit, or a few months ago when the Dow took a big hit and gold and silver weren't moving, they're saying, oh no, gold and silver is no longer flight to safety. Well, I'm not hearing them talk about the flight to safety quality of gold and silver today, and I didn't hear him talk about it last week. So, but I think that's going to start taking over the mindset of the market, and especially because I think what we're seeing, and it's not just in the United States, but globally, especially China, and we got the financial issues going on in Italy right now. It's about ready to melt down. That'll spread to Europe, but the United States is in bad a financial condition, or as risky a financial condition as China is. It's just, the propaganda in the Western media wants to point fingers away from the U.S. and towards the East. So we're only hearing about how risky China's financial situation is. Well, the U.S. financial situation is equally as risky, possibly even more risky. So, like what we saw in 2008 when we had the financial crisis, gold soared. And I think we're going to see that again over the next 6 to 12 months, and probably it'll extend longer, I would think.
Now, you mentioned the stock market, how we saw a sell-off over the last couple of weeks. Last time we had you on, we were seeing all-time highs in the Dow, and you were saying, specifically, yeah. It seems like the fundamentals for the stock market, though, are deteriorating, and we've kind of seen maybe the effects of that. Over the past couple weeks, we've seen a major downturn in not just the U.S. stock market, but around the world. And a lot of guests I'm talking to right now are seeing there will soon be a more than 50% sell-off in the stock market. Now, some are saying that it seems like maybe a quick drop, or others are seeing maybe just a slow grind down. What are you seeing going forward?
It's impossible to know in terms of, how I position my own trading account and the recommendations that I put in my short sellers journal. I have a combination of some long-term bearish bets and some short-term bearish bets. I mean, typically we've had this is the biggest financial bubble and stock market bubble that we've ever seen in history, globally and in the U.S. And right now, the asset values, the paper asset values of financial securities are so far out of whack with underlying fundamentals that we're going to see some very quick corrections. And we might see some pretty sharp bounces from those corrections or sell-offs. Last week we saw an 800-point plunge in the Dow, and then a couple days later it bounced 500 points. I think we're going to see extreme volatility like that, but I think the volatility is going to be skewed heavily to the downside, just like it's been skewed heavily to the upside for the last 8 years. So it's impossible to know, what the shape of the graph is going to look like on the way down. But if you just go by history again, we could have 30-40% drop in the S&P and the Dow before we get a move higher. I mean, if you want to just use the Dow Jones Home Construction Index as an example, I mean, that thing's down about 35% from its top in January, and it's almost been nonstop. And that's what happened when it started going south in the middle of 2005. It was down, it actually dropped 51% over a 12-month period before it staged a bear market bounce. And we could easily see that happen with the Dow and the S&P.
Now, with respect to what the Fed is doing, because some people might say that we're seeing the sell-off, because the Fed is raising rates. Now, I know Trump has talked about how he doesn't agree with what the Fed's doing. He doesn't think rates should be raised, and he's been criticizing them a lot. And the interesting thing is, I was just reading an article about this, and how if Trump does get elected again, it seems like about it's 6 out of the 7 board of governors of the Federal Reserve will end up being appointed by him. So what is your perspective on how maybe political the Fed is becoming? If Trump is going to appoint, a large majority, vast majority of the board of governors, does that kind of mean that it means that the president has having a big influence on monetary policy?
Well, I don't think that's anything new with the Federal Reserve. I mean, if I remember reading articles during the Bush administration that Alan Greenspan was checking into the Oval Office to talk to the president like once a week. So, I mean, if you're telling me that's not politicization, however you say the word, if you're telling me that's not politicizing the Fed and its policies, I don't know what is. Now, let's put Trump in perspective. He's an other people's money real estate operator. So his favorite kind of money is free money. Other people's money. And, if he has to pay interest on it to borrow it, he wants that interest rate to be as low as possible. That's how real estate operators operate. So he's obviously completely biased from his perspective in terms of how monetary policy should function. Interest rates, if you use a real inflation rate, we still have negative real interest rates. And I know the economists at the Federal Reserve, I know they know this, and I think that's why they're continuing to raise rates. And they could jack up rates. If you want to use a real interest rate, I think, didn't we do this exercise last time? We went and looked at, how John Williams would measure interest rates. And so, the rate of inflation, and it's at least 6%. I think that was based on how they calculated the rate of inflation in 1990 or something. The government. So, if you want to use that, we're at negative 4% real interest rates. So they could jack interest rates another 400 basis points, and we'd be at a neutral monetary policy with respect to interest rates. So I think that's a big part of the reason why the Fed is raising, or let's just say nudging higher very slowly interest rates. I think it's also a way to somewhat defend the dollar and to maintain some semblance of credibility of the Federal Reserve as a independent entity that's supposed to establish the monetary policy of this country. In terms of the number of appointees Trump might or might not make, I think the 6 out of 7, I think that's based on an 8-year term. And I think if he is just a 4-term president, then I think he's got potential control over 4 of the appointees. But also, let's not forget, the appointees have to be approved by the Senate. So, and I'm not, it typically is a rubber stamp process, but who knows? And let's just keep one other thing in the context, and that is if the global players on the at the global level sense that the Fed is being controlled and manipulated by the president, it's going to completely shred the credibility of the Federal Reserve and its monetary policies, and that would, that'll just hammer the dollar. So there are some checks and balances there, on Trump and his actions.
All right. Well, Dave Kranzler, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Sure. Thanks for having me on again. I always enjoy chatting with you. You have great questions. Again, I think the degree of financial risk is now, it's probably at the highest level that any of us have ever seen in our lifetimes. And that would include people who are older than me, who may or may not be watching this podcast. So I think the best thing to do is, we may get some greed-inducing bounces in the stock market, but it's going to go a lot lower. And if you leave your money in the stock market, you're going to watch your net worth get wiped out. Conversely, I think now is as good a time as I've seen in the almost 18 years that I've been involved in this sector to allocate capital to the precious metal sector and the mining stocks. So you can find my website at investmentresearchdynamics.com, and on the front page I have links to my 2 subscription newsletters, the Mining Stock Journal and the Short Sellers Journal.
All right. Once again, Dave Kranzler, thank you so much for your time.
Thanks.